Well, thank you for joining us for today's webinar. My name is Trace Blackmore. I host the Rising Tide Mastermind, as well as a podcast called Scaling Up H2O. And we've been doing a proactive webinar series to keep everybody up to date on information that they need to know during the coronavirus. Now, we're very fortunate. We had a guest on, Mike Iverson of Trillium Financial, a few weeks ago. He was helping us with knowing what we needed to know about applying for the Paycheck Protection Program. And today we're fortunate that he is back, and now he's going to talk about some of the changes that have just come hot off the press when it comes to loan forgiveness. So Mike, thanks so much for joining us and welcome back.
Thank you, Trace. Appreciate it. Yeah, you're absolutely right. A lot of changes since the last time we talked, actually. Both from the SBA gave some changes, and then just this past week, we've got some from Congress. So, and I believe the bill's been signed, or is being signed by the president this week.
And I know we had questions before Congress met on it. Now we're getting a new bill signed, so there's even more questions. And
yeah,
we're right around 8 weeks when the first batch of funding went out. So there are people out there that are starting to ask for forgiveness. So, what do they need to know? What's this new stuff that's out there?
Sure. Well, what I thought we'd do is we'll take you through sort of the criteria, and then we'll go through what are some of the changes that we've got going on, then also the documentation that would be required, and then also some other updates in the legislation that actually impact folks that before wasn't going to be allowed by the current guidelines. So does that sound like a good place to start? So we'll start.
I think it sounds like a great place to start.
All right. Well, why don't we do this? I'll pull up, and I will start over here, and I'll share my screen. And hopefully everybody can see that. And I'll start the webinar with the first page. This is essentially the 4 areas we'll touch today. And why don't we just jump into the criteria? Because a little bit has changed. So before, if you recall, legislation said spend 75% of the loan on payroll. Well, now it's 60%. And so what they noticed was folks were having a hard time really meeting that 75% requirement within an 8-week period. Now, what is a little different, and this 60% comes from the legislation just passed by Congress. And you see there's a quotes cliff. Well, what that means is if you don't spend up to 60%, then you'll have no forgiveness at all on your loan. So you've got to at least do 60% of the payroll cost. And just to go back what that is cash compensation paid to employees, commissions and tips, and then also medical premiums paid, and also any employer retirement payments made during that period. So that's an important point for folks to know. If you don't spend up to that 60%, you'll get no loan forgiveness at this point. Another change, it was 8 weeks. So everybody was scrambling, we're going to have to spend all this money in 8 weeks. And the thought being, well, we're going to have this real short time frame, and we're not going to we're going to get the economy rolling back again by the end of the second quarter and into the third quarter. Well, that doesn't look like the case at this point. And some companies are finding that things look a little uncertain going further out. So Congress ended up allowing you to opt into a 24-week period, which basically ends on December 31st of 2020. So you can still do the 8-week period if you want, or you can opt with your bank to now, instead of spending it all within the 8 weeks, go ahead and extend for 24. Or for those who are still applying, now you will have this 24-week period to do it.
Mike, for businesses out there that have had no issue meeting the 60% requirement, would you say that they should just go ahead and do it within the 8 weeks?
Good question, Trace. So I think it's a matter of, when you look at your business, what do things look like possibly going further out in the next quarter? Are you going to need capital at that point? And can you get capital outside of what you just got from the PPP loan? So for some folks, if they go, you know what, if I get debt forgiveness on this, the loan's, completely forgiven and off my books, now I can go back to a bank and get a conventional loan or get capital infused into my business in some other form to keep me going during still a slow period. That might make sense. Then for others who are like, no, I probably couldn't find any more capital, and I won't have spent all this. Maybe I need to drag it out, or I could spend it all, but then I spent it all and now I'm still in the hole. So that's a good question. Very good. Another of the criteria is a little different, and people were having a hard time. It was originally when you paid your expenses. So you had to pay those expenses during that covered period. It would have been 8 weeks and now it's 24. So what they added is language under incurred. So what does that mean? It means that if you have a bill that you've incurred during that period, but the normal payment cycle is after the covered period, it can still be included. So I'll give you an example. Utilities. So if I have a utility bill and I pay my utilities, let's say on the 10th of every month. So right now I paid my May utility bill and I paid my June utility bill. Let's assume I'm going to go for the 8-week forgiveness. And that 8-week forgiveness ends by, we'll call it June 15th. So now I go and I've got this utility bill that I want to include, but I won't pay it until July 10th. But that July 10th bill actually relates to half of June and a little bit of July. Well, I can include the June portion as part of my payment or part of my expenses that I get to fund a loan with. So that was a nice addition that the SBA added. It wasn't, I don't believe it was added in the legislation, but the SBA did at the end of May. So that's very important. And we've talked about this before, an FTE headcount, which a little bit has changed. One is you do have those comparison dates in order to compare your headcount. And some of the rehire obviously has changed because originally it was June 30th, but now it can be 12/31 to have your headcount back to the same place it was compared to these two periods. Whichever one is obviously lower for you is better. Now, so if you think about it this way, if I had, we'll just call it 50 people in one of my periods that I chose, let's say I chose this period, the first quarter of 2020, and I had 50 employees at that time. Had to let some go, but now I've got the funds to bring them back. And so by the end of my rehire period, in this case, they've stretched it out to 12/31, I'm back to 50, I'm good. Or in my forgiveness time frame, if I'm going for the 8-week, if I'm back to full at that point, I'm good. So those are the main criteria for the most part. There are some things that are exceptions or reductions to your forgiveness. And one of them is this lower FTE that we just talked about, but there are some safe harbors that I want to call out separately because there's a few things that have changed. Both the SBA changed it as well as the legislation changed and actually included some more safe harbor provisions about hiring back folks, but also the fact that how can you not get dinged by having a lower FTE count at the end of your covered period. Reduce the pay by 25% or more. So if you've got someone who you've got on staff and you reduced their base pay by 25% or more, then there is a calculation that you'll have to do and that would reduce your forgiveness amount in the loan. And the key is it's the base rate. It's not the number of hours they've worked, therefore the total comp comparison. It's the base rate itself. So if I'm paying an hourly worker $25 an hour, but due to the COVID situation, I had to come in and go, I got to cut your pay to cut costs. I'm cutting it to $12 an hour. Well, that's more than 25%. Then you're going to have an issue. You're going to have to make a calculation for that employee. And this is done on an employee by employee basis, not globally, but by employee. Spend less than 60%, we talked about that. So now it's the 60% split. So if you spend less than that, no loan forgiveness at all at this point. I'll be curious to see whether or not there's any changes to that. Who knows? But at this point, the way I understand the legislation from others who have also looked at it very deeply, more than I have, is it's a cliff. So you got to spend at least that. The next one is exceptions. So what are these exceptions? We have some safe harbor rules, as they call it, for the FTEs, so that you don't, we're in a very difficult environment. So if you think about, we have close to, I think the last figure I thought I heard was like 40 million unemployed.
Yeah.
Yeah, a very large number in a very short period of time. So the question is, we should be able to find a pool of folks to rehire. However, some industries were saying that, we've been impacted, but we've also been impacted by the fact that we had a shortage of people before, and we're still having a shortage of people that are the qualified candidates that would fit the positions that we're trying to then get back up and running. So what they did was, we've got a couple of things. If an employee and you offer them to rehire them and they decline, then you can still include that employee headcount as part of your calculation. You're going to want to make sure you have the documentation for that, show that they declined. And also one of the guidelines is you need to report to your state unemployment that you were going to rehire that person and they decided not to accept. So that way you have documentation that you can prove to the SBA, I took those necessary steps to rehire and they decided not to come on board. The employee leaves voluntarily. Then during that covered period, if they decide to leave on their own, then you can still include them as a part of your FTE headcount. Employee requests reduced hours. So some employees, frankly, they might have to ask for reduced hours because maybe they are helping care for a sick elderly person potentially, or their kids are now at home and they're playing, they were playing teacher and doing whatever they needed to do for their kids, as well as maybe some parents or even other family members. And so they had to request some reduced hours. So that won't be a ding against you. You'll be able to include them at their normal FTE level that they were before they asked for the reduced hours. And employees that's fired for cause, they didn't want to feel like they would, cause you to have to not be able to have that flexibility during this tough time. But if they are fired for cause, then you're still able to include them as part of your FTE. This was added by the legislation, which is the inability to rehire. And I put in here a good faith effort is really kind of how it states. So what this means is that an employer is going out to hire for that position. They post it out on the internet with various sites. They maybe have a recruiter that goes out to help try to recruit for that position. They have the specs written out very clearly what the position is, and they show the efforts. They show folks being maybe potentially interviewing them, They could show a roster of candidates that they've looked at that had either maybe passed on, coming on board. So that way they can show we tried, but we couldn't rehire in that position, and that won't be dinged against your FTE calculation. I think this is going to be a little bit of an area where there's, what constitutes the inability and how do you truly define it. I think there will be probably more information on this as we go from the legislation. I think the SBA will have to make some interpretations on this and say, what documentation do we need to show as a business owner? The inability to return to the same business level. So this is where businesses that are going to be required by the government to set certain standards that before were not in place. And that's the thing of social distancing, capacity at restaurants being at a certain capacity level and not beyond that. So this is going to hit those industries and businesses where they are required to create that space, and that will impact their ability to generate the business level of activity they were at prior to COVID. So that'll be something also that'll probably be developing in terms of guidelines. This one, you'll probably be able to at least show from some businesses a very clear indication. But if you think about it, there's some other businesses where that will be more of an indirect impact. You're not required. So I'll give an example, your industry. You're not required in the sense of your business to social distance because you've got clients coming in. You're going to do that yourself and implement that yourself. Well, you're indirectly impacted because if you're servicing a hotel, they're going to be required probably to have a certain capacity level and not beyond that in areas that would be revenue generating opportunities. Well, that'll impact you because that's a downstream impact. So the question is, how does that work for those that have quote unquote indirect impact on these types of regulations? We don't know.
Yeah.
I think that's something that'll be forthcoming, or something that you'll just end up hashing out with the bank at the time you're looking for forgiveness. But I think there'll be definitely some guidance along the lines for this, because you've got to be able to document it and show how that happens. For some, easier than others. So those are some of the exceptions related to the FTEs. So that way, the efforts that people do and try, or the situations that are caused during this time, are not, an imposition completely on the business, and therefore there's no way you'll ever meet that FTE requirement. And then we get to documentation. So what do we need to show our bank? Who are going to be basically, they're going to be the ones that are going to tell us how much forgiveness we get or forgiveness amounts. From what I've heard from bankers, this is essentially for payroll, the documents. The 941 is your quarterly tax return that lists the payroll paid during that period. Payroll registers, so whether you do it internally or externally, you get some payroll registers for that covered period so that you can show the amounts that were paid. Quarterly and state local income tax on compensation. So any of those state filings that you did during the covered period for income tax at a state or local level that the employer was charged. Medical premium statements, and then the retirement employer contribution statements. So you'll want those. The premiums, you probably will want to show how, a canceled check or the bank statement where it was drawn out directly from your bank account, something like that. Also to back up the fact that you actually did pay it. Or sometimes you'll also get the vendors will send you a paid invoice that'll show it's been paid. But we've also got the non-payroll. So you'll want copy of lease agreements, canceled checks or bank statements again, copies of the utility bills along with canceled checks and bank statements. The one thing I'll point out here in the lease agreements, what hasn't been clear yet is related party leases. So many, a number of my clients, for instance, have businesses that are located in the buildings that they own as a separate entity, that business owner. So they have real estate, and they are owner-occupied real estate. And the question is, can you make that? Can you make those payments? The theory would be is yes, because if you've got a arm's length transaction with a copy of a lease agreement, it just so happens you're the landlord, business owner, so that's okay. But that was not certainly spelled out clearly in the regs. I don't foresee that being an issue, but I'm also not, the ultimate gatekeeper on that.
We know when we know.
Yeah, we know when we know. And then the FTE calculations that you have to do, you'll want to have the payroll reports showing the hours worked. And one of the things they did put in some of the guidelines the SBA did, which was very helpful, was a way to calculate this either on a more complicated basis or on a real simple basis. So I'll give you the more complicated basis, and that is, if you work less than 40 hours, then what is the average number of hours you worked during a week, for instance, during the covered period? So let's say the average was 30 hours. The full-time person is 40. So we're just going to do the division. 30 divided by 40 is 0.75. So that's a 0.75 FTE equivalent. Now with the guidelines, the SBA guidelines came out and said, we're going to give you an even simpler approach and say this. If you want to, everybody that works 40 hours, that's a full-time person. So that's one. Anybody that works less than 40 on average, count them as a half. That's 0.5. And you just add them up that way to come up with your FTE calculation. So I think the idea is what works best for you based on the measure periods that you're using, the measurement period you're using to compare yourself to. What works best for you. So what also has changed with just some of these recent updates in other areas that are important to know? Well, one of the things they did do for payroll is they came up with this quote unquote alternative covered period. Because if you remember, it talked about incurred and paid that we just went over. Well, for payroll, there are a lot of folks are running into, well, gosh, I just got my loan, and the understanding is it was based on starting on the date of the funding. Well, my payroll was 2 days ago, and I just got funded, and I'm not able to use that money for those payrolls that I just paid. And then going forward, based on the timing, it looks like I might miss another payroll.
That's exactly what happened to us, Mike.
Yeah. So what they did was they said there's an alternative covered period that says you can either use the date you receive the funds or the first payroll cycle, okay, and measure from that point forward, just for payroll only. So that way you could get a good full set of payrolls in during that 8-week period. So if you're paying bi-weekly, you'll get a good solid 4 payrolls during that 8-week period. The other thing too with this is that paid and incurred language does apply here to payroll. So if you incur the payroll at the end of the covered period, but it doesn't get paid until after the covered period, as long as it's in the normal course and it's a normal day of payment, you'll be able to include that as part of your funds for the PPP. So it's a real nice thing that they did to really make a difference, to make sure everybody got a good full set of cycles of payroll in. Whether you pay weekly, you get 8. You pay bi-weekly, you get 4. Another thing that happened was they've now extended the loan. It was 2 years, now it's 5. So you have 5 years to pay back any amount that isn't forgiven at a 1% interest rate, same rate as before. You get now, instead of a 6-month deferral, you now have 10 months, which means from the time you finish the covered period, you'll now have a 10-month deferral before you have to start making payments on the loan. And then last, and this is actually pretty important, there is a program, the Employer Tax Deferral Program, where the employer portion of Social Security, the 6.2%, you can enroll in that program today, and you could under the old rules as well. But once you got forgiveness on the loan, then this had to stop. But now you can continue it through the end of the year. So if I'm a business owner, I've got a client, for example, that for every payroll they run, they spend about $6,500, $6,600 a pay period on employer Social Security tax. Well, now they can defer that through the rest of this year, save that cash, and then repay it. And the repayments are still the same end of 2021 and end of 2022. So half at the end of 2021 gets paid, and the other half gets paid at the end of 2022. So that's kind of nice. It doesn't stop at forgiveness. You get to do that for the rest of the year. And those, Trace, are the updates we've got for the loan forgiveness, as well as any other programs that would impact folks in this 3P.
Well, it seems like they made it a lot more user-friendly.
They did.
Mike, let me ask. I'm sorry.
They did. Yeah, absolutely.
Let me ask, Mike, I know there are people out there that are right on the line of that 8-week period. And since nobody's done it before, they're wondering what the process is like. Is their bank going to contact them? Do they need to contact their bank? What do you anticipate that looking like?
There is a form. It's I want to say, let me make sure my notes. It's form 3508, and that's what you'll be submitting to your lender. The SBA put the form out in terms of how to fill it out, and you'll reach out to your lenders. That's what I would do. I'm not sure whether or not lenders will reach out to you, but frankly, if it were me, I would reach out myself, be proactive about it. Look at the date that your loan is going to end. So if my loan was ending on the 10th of June, I'd be reaching out to my banker this week and going, okay, I'm planning on submitting loan forgiveness. This is what I understand. I need to fill out this form 3508. I understand these are the documents that I'm going to need. This is what I understand I need. Is that correct? And then make sure you're in contact with them to say, this is what I'm including. Does this make sense? If you want to, I might even give my banker and go, here's a draft of what I'm looking at, and this is how we've tracked it. And they go, gosh, that's great. That's very helpful. Have that as part of your paperwork. Because I know a lot of firms have been putting out PPP loan trackers, some accounting firms, finance firms, others, or even just internally, they create their own tracker. And I just recommend, for me, if I've got that tracker, think about if I'm creating a book and I want my banker to open the book, and in the index, I'm going to have my tracker, I'm going to have my payroll costs and all the documentation for the payroll costs. I'm going to have my rent agreements and the checks with that and the bank statements for that. I'm going to have my utility bills and my copies and my checks and cancel checks for those and statements that might go with that. And then any FTE calculations that I get from my payroll provider and or I do internally, have those calculations done as well. And then obviously the very top of it is the loan forgiveness application. So you can hand that to your banker and they're ready to go to audit it, track the numbers, ask questions, and then hopefully you get full forgiveness on that.
Mike, one of the documents you mentioned was the 941. A lot of people are going to be submitted before the finalization of that quarter. What do they do?
So I would recommend you're going to use your payroll reports. And here's how with one client, what we're doing is they're going to have the same issue. They're going to be done before the 941s. So I'm having them submit a payroll register, which shows all the payroll employees by listed out, their net pay. I also have what's called a cash requirements document that shows the amount getting pulled out of the bank because they do a direct draft. So that'll show up in the bank statement. So the banker can take that number and tie it out to the bank statement. And then on the tracker, it shows that same amount on my tracker and any deductions that I take against that amount related to maybe the cap. So if I've got employees that are being paid over $100,000 annually, then I'm showing how much of that gets pulled out so that the net amount that remains that I funded for me from the loan is able for then the banker to go, okay, they said they had $100,000 payroll. They backed out $10,000 for the highly comps. They're supposed to reimburse themselves for $90,000. I can see that in the bank statement and it came out of their account, and I can see the transfer from the PPP loan funds over for $90,000. So that's probably the best you can do. And then the banker might say, okay, that's great. Then what I'd like you to do is once you do get your 941s, please send those in. And then that way we have that documentation available. And at that point, what the banks have is, if I recall correctly, let me look at my notes. When you submit, at least this was the last I heard, when you submit for forgiveness, the banks have a certain amount of time to turn it around. Okay, here we go. So the lender has 60 days after they receive that application for forgiveness to process it and go, yep, you're good. That's great. Thank you very much. And we're going to forgive your loan. So if you think about the folks coming up here in June, the likelihood of them getting maybe a complete understanding of their forgiveness might be not until the first part of July. And that might be where the bankers go, we've got everything we want, but we really would like to have that last piece of documentation, which is your 941. So maybe we wait until you're done with the quarter, get that to us, and then you'll know at the beginning of July. I'm not saying that's what would happen. That's just a potential scenario, for example. Mike, go ahead.
I think the example you gave, the person's PPP was up June 9th or June 10th. So in that situation, how long do they have to get the paperwork into the bank?
You know, good question. I want to say, Trace, I have to go double check on that. I don't know if there was specific guidance from, certainly not that I know of in the new legislation, but from the SBA. But let me get back to you because I can't recall if there was a deadline, but I know there's got to be. Mm-hmm. I'll get back to you on that. That's a great question.
But your advice is, the week before, at least reach out to your banker, say, this is what we're doing just to get everything going.
Yeah. Okay. And at that point too, talk to them and go, our time is up on May 10th, or in this case, June 10th. So, and what they're doing is they're going to call the bank. They're going to say, here's what I'm doing. And when I pull this together, how quickly do I need to get it to you? Because again, I'll look it up for the regs, but I don't know if there was anything specified particularly in there, but certainly your banker is going to say, hey, I'm getting, I don't know how many a day in terms of applications. So as long as you get it to me within a certain time frame, you'll be good. So I encourage folks, even throughout this whole process, to have stayed in touch with your banker even earlier on, after you got the loan, just keep on, when the new regs would come out or new information you would get in touch with them and say, this is what I understand. Am I hearing this correctly? And they should be able to then tell you.
Well, Mike, this was very informative. I know I learned a lot. So thanks for coming on once again and educating us all about the ever-changing world of PPP.
Yeah. Stay tuned. There'll be more. I'm
Thanks,
sure.
Mike.
All right, Trace. Thanks a lot and be well.